Hey everybody, this is Jim at SP500chart.com. It's about 4:20 on August 13th, 2013. Before we look at the chart, let me remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out looking at a 30-minute chart. Today we got a more solid test down here of this proposed support line, and really yesterday didn't quite reach that point, and today it's as if the S&P took a look back and said, "Do you remember touching that line?" And all the stocks that make up the index said, "I don't think we got that done." So it got done today. So we got a solid move down to this bottom line, and then broke out above. Let me go into a little bit tighter shot here, if you will. So got that little preliminary breakout going on yesterday. Today opened higher, but then came back down, finished the job. Well, seems at least for now to have finished the job of tagging this line. Broke out above this resistance line again, got a little jag in it, and then quickly took off, and then spent a little bit less than the second half of the day going sideways. Now I'm going to do a couple things here to clean up the chart just a bit. I'm going to leave this line because that is still very much something that could come into play, but I'm going to kill some of the stuff that we got going off over here to the left, because these are things that have done what they're going to do, and I don't think we're going to revisit any of those trend lines at any point. I just don't think it's going to happen. So now let's extend our 1700 line out just a little bit, because that still is resistance. This now still looks like support. And what's happening is we are now within a range that from the top to the bottom is less than 1% of the current value of the S&P 500 index. So I just say that because we've mentioned that lately it seems like a lot of the noise that you get in the markets, just the stuff that's almost random, but I mean not really, but you know what I mean. Let's say you get a half dozen of the larger S&P stocks that just happen to move in concert with one another. That's going to move the market. Well, if 3 of them were to go up and 3 of them were to go down, the S&P would essentially go sideways. But if you get 5 going up and 1 going down, the S&P is going to go up. So what I'm saying is, believe it or not, in technical analysis of stock trends, when John McGee talks about reading charts, the primary thing that he talks about is not charts of indexes. He's talking about charts of individual stocks. Okay? And one of the things that he says is that he's not totally sold on how applicable what we're doing here is to an index. Now, we've seen things work out very well, and maybe that's because we live in a much richer information age than what he lived in the 1950s and 60s. But just to make a long story short, you got noise, and the noise can be 2.2, 0.3, 4.5%. That's why you want to see that 1% breakout threshold met on things where you're looking for technical significance. And right now, from here to here is about 16 points. So that's less than 1% if we move from this top line to the bottom line. Well, it looks to me like the S&P clearly wants to get up and test this line. Let's see if we get that job done tomorrow. If it breaks, then I think we are likely on target for a move. And we've been measuring this a couple different ways, but I'm going to say a move up to the 1720s should be a minimum expected move. But we will have this little line here that could exert some influence, so that could mean that this takes a few days to happen, if it's going to happen. Got to get over this first. Now, one thing, I'm just going to show you one more thing here on this 10-minute chart. If we go back here to what is now the all-time, let me make sure I'm saying that right. Yep. There we have our all-time S&P highs. By the way, heads up, okay? What we're looking at right here on the 30-minute chart, this is an important line. When I'm talking about this line down here being potentially important, I mean that, because this could be a top forming. Okay, we don't know yet, but there's a couple reasons that, at least for now, lead me to believe it may not be. But this line is still important to watch. And let me show you one of those reasons took place today. And that is, if we go back to our all-time high and draw a line down over the last couple of peaks, you can see that this move today got out over this line that had been resistance. So, I mean, that's not a hugely important technical line, but I still think that's worth mentioning. And I'm just going to make this, make it like a light green or something, just so we keep tabs on it. So, as we look at what's developing here, it still looks to me like this is going to be the bull's goal should be to break 1700, setting up a move that will almost certainly result in a new all-time high in the S&P. The bear's job, I think that shows us enough. The bear's job is to take the S&P down below this ascending trend line that could be serving as a neckline if this were to happen without benefit of of equaling or surpassing this high up here at about 1709. That's just a fancy way for saying if we have a failed rally over here on the right side and then we come back to revisit this line sometime later in August and this were to break, then we would look back on this and we would see a head and shoulders top. So at this point, quite frankly, it's kind of anybody's guess. But getting over this little line right here seems to be at least a little clue that the market may be wanting to move higher. So let's see what tomorrow and the next day brings. See if we can see if the S&P can climb back over into the 1700s. If that's the case, the next trip up there could very well likely produce another all-time high. See if there's anything else that we need to talk about. I mean, we could look at this little pattern right here perhaps and point out its shape, because it's fairly well shaped. And if we extend this on out, you can see that by tomorrow afternoon, probably sooner, this little guy will have either moved up and out or back down. If it moves down, let's see if this line picks it up and produces a bounce. If it moves up, let's see if it's got the steam to get over 1700. So right now, still between 1700 and our rising support line right here. Until one of these goes, well, that goes without saying, until one of these goes, we're going to be between these two lines. Duh. But whichever one goes, we're looking for a move of probably about a minimum move of about 1%. And that's not much. So, guys, that's just kind of the nature of the beast right now. Maybe actually, if this bottom one goes, we'd be looking a little bit more than 1%, because that would be this head and shoulders top. So we'd be looking at roughly probably about 1.75%. So let me change what I just said. I spoke in error. If we get up over this line, then I think the implied move would be roughly maybe a percent and a quarter, something like that. If we break down under this line, then we're probably looking more at a little under 2% to the downside. So that's your video for August 13th, 2013. Let's watch that tiny little triangle, see which way it goes tomorrow. And appreciate your time. Thank you for your support. Take care.